Hey everyone, it's Tuesday morning, March 18th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Before we get started, a quick note, today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. So, are we out of the woods yet? Well, not quite. After a rough couple of weeks, the stock market bounced back yesterday, but recession fears are still keeping investors on edge. The Standard & Poor's 500 climbed about 0.6%, marking its second day of gains in a row. The Dow Jones did even better, jumping over 350 points, up about 0.8%. The Nasdaq? Well, not as strong, up only 0.3% as some of the big tech names like Nvidia and Tesla struggled. This rebound comes after a tough stretch where the Standard & Poor's 500 officially entered correction territory, and the Dow had its worst week since March 2023. Investors have been shaken by mixed economic data, concerns over tariffs, and of course, speculation about what the Federal Reserve will do next. Now, over the weekend, Treasury Secretary Scott Bessent stirred the pot a little more by saying he's not worried about the recent stock slump, calling it a healthy correction. He also made it clear there are no guarantees the U.S. will avoid a recession, not exactly what the market wanted to hear. On the economic front, we got a retail sales report showing weaker than expected consumer spending. February sales rose just 0.2%, well below estimates of 0.6%. And to make matters worse, January's numbers were revised down even further, from a drop of 0.9% to a decline of 1.2%. Meanwhile, New York state manufacturing activity took a nosedive. The index dropped from positive 5.7 in February to negative 20 in March, signaling a sharp slowdown in business conditions. And now, all eyes are on the Federal Reserve's two-day meeting, which kicks off today. No one expects them to change rates this time, but investors will be laser-focused on their outlook. Will recent data push them toward rate cuts sooner than expected? Or will they hold the line despite concerns about economic growth? We'll have answers soon enough. For now, the market is breathing a little easier, but don't expect the volatility to disappear anytime soon. That's it for today's Capital Markets Quickie. Don't forget to subscribe and share. I'll be back tomorrow with more market updates. Until then, stay sharp and stay invested.